Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So last week we saw a nice rally. Lots of our go-to names had resolved to the upside out of tight patterns. On Friday, talked a little bit about the red dog reversal into the close where we traded below the prior day's high and closing the low. Time to take a little risk off. And then today we went back and forth. And today was a tough day because of two things. One, the divergence in the banks. I know for myself, I came in thinking, you know what, I don't want to chase the high beta names that gave us a lot of awesome action last week, but it could be that the banks take the baton and go after resting, and I know I added to a few of the banks today, and then I got hurt a little bit on that. I'm still with some, took off some, which I'll get into, and basically tried to be short some of the high beta names, and I'm just not really a great short, and that's the pure honest truth. I try, and it's hard for me. I'm working on it. I know guys on the site made some money fading the Apple or fading the Amazon, and I tried with Amazon, and I didn't trade Apple once today. Been all over that all week, not once today. Granted, that's half the battle that I didn't chase it up there, and I tried to help people not chase it on the 7th or so up day. But I should be able to short versus a high and make some cash flow money that way, but it is what it is. So let's just get into the charts. It's not about me. It's about what's going on. Here's the spiders. So if we look at the overall trend that's been in place since November, it's been very strong. I'm going to draw it real quick. Here is that macro trend from that red dog reversal. Here is where it kind of broke below it for a second, came back above it. You had your outside day here that led to some corrective activity. You had your head and shoulders top that led to some corrective activity. Then you had the false breakout here that led to some corrective activity. So with that said, the last navigatable range that we've been talking about has been since this reversal right here, and then this engulfing bar that took back this descending channel. Then we digested above, and then we took out the highs here, and there's where we are right now. So with that being said, not the end of a world that this was a day and a half big down move. But in our lifetime or in our trading world, it's good to be able to save some money. And with that said, when it pushed above 181.22-ish and came back below, that was one signal to take off a little risk. And then today, you hit the 8-day. So either you add it to your shorts, which has been a tough trade throughout the course of 2013 because it hardly gets downside follow through, or you covered somewhere, or you went out somewhat neutral, because I do still think perhaps we could test this prior breakout area, which also has to do with the 21-day, which would be which definitely would rock the boat a little bit. Or we continue down. You have a 179.77, which is another small little level, and then you have bigger support. So we'll see what happens here. But if you took off a little risk there, where you sold some of the high beta names into last week's strength on Friday, you came in today and you didn't really care. Apple was our focus last week, and entries and exits do matter. This was one nice area that we talked about, which I think a lot of us had a call spread on before earnings, and then we've been waiting for this move. Last week, it gave us a nice move above this 526, and I talked about if you didn't buy 526 and you didn't buy this prior high here of 538-ish or even 550 on Friday, you had no business buying 560 today. So with that said, you had a small red dog reversal. So this was, if you were still trailing along, maybe you got out when it went back below 558-ish. And you did a better job than I did. I came in flatted. And then today, closing the lows. So typically, it leads to a little bit of corrective activity. So I don't know how we're going to open tomorrow. If we open up a little bit, some might try and fade it through today's low. If we open up down, maybe we get a nice little buy, and then it creates another level here to trade against. We're allowed to navigate these things. That's what we do, especially if you're trading for P&L. So with that said, here is where the gap starts. So this would be, I posted the chart, support 1. So something to look at. With this as our point of reference. And then here is support 2. If Apple's any good, it should not break the prior high of 538-ish, and that should move up. And we'll see. That means we had a pretty sizable correction this week going into the jobs report. This is a day one to the downside. Let's see where we hold up. And hopefully you definitely took some off the table, or at least want to recross back below 558. Amazon, same thing. Talked about not chasing the last viable pivot up here, which was right around what was this? This was 374. I tried shorting this today. I think I lost a little bit of money, and you could have made money if you're better than I am at that. But anyway, it held this gap, and see what happens next. This should create some kind of sideways consolidation. Netflix was a little weaker. It it actually closed off the lows, so it shows you couldn't really press, but it opened up and tried to hit its 8-day moving average, this prior area. So hopefully you took that trade, or you didn't chase it today, and still actually with a little bit more time, this still probably looks okay, but you had a doji here for the first time in a while. You know what? Baidu closed well. I think some people still stayed long Baidu. Baidu, if you look at it relatively, you see this descending channel, which we drew, broke above, went to the highs, engulfing day, and this closed near the highs with the market closing near the lows. So this could be on the radar tomorrow. If we open down, maybe this goes green first and breaks out above this area. This showed some relative strength today. If you were looking to take something home long, this was probably something to stay with that's not extended, that still looks like you have a viable pattern here. With that said, also, some were trading some of the 3D names. This broke above this prior pivot, but needs probably a little bit more time as it came pretty far off that lows after that debacle here, or not debacle, or corrective phase right around there. Let's take a look at VJet. Some people were talking about it, but I didn't see much action there. It's still just navigating this lower end, not much to talk about there. This little guy, CAMT, look at the size of that volume there. So it seems like there's commitment to this. If you put in volume, go like this, you put your volume in. Nice volume today. So I know guys in VTF were talking about it, so you probably could see a new move. It trades above 643. That's something in that sector, I guess, that could continue, but it's very speculative, so be careful there. But it's trading decent sized volume, so there's some commitment to that. Let's move along to the banks. Goldman, definitely frustrating. It hasn't broken out the way Goldman usually breaks out with the other banks. I was focusing on it that perhaps it could trade above this key area, this 170, and it tried, and then it tried again later in the day, and it had a doji close, so it's definitely frustrating. It's been going to the upside, but this has been hard money. This bank has had the hardest money to be made out of all of them. Bank of America, I added to, and then I had to take some off as it looked as if it was going to break above this recent flag. Here is the meaty buy, the last jobs report about 3 weeks ago. Here's when it broke to new highs, and today it tried to break out and couldn't. So I added to it, and then I took some off. I'm still long it, but this shows you that it's just not ready yet. It's still extended from the 8-day, so it needs some time. It's still extended from the 21-day. So it's not as pent up as it could have been. So with that being said, if you took some off, that's fine, but just be aware or be on the lookout to put some back on. Citigroup, I went home flat. We talked about this to play some catch up down here. Had a nice move, and then I've been trying to stay in it. Then today it broke below this mini flag, so that got me out. If it reverses and I see something in the banks like very potent, I'll get back into it. But overall, after the size of this move, I'm just going to wait. Let's see how it handles the 8-day. Let's see how if it comes into here. So this way, at least if you're not committed, you could navigate it and figure out where that pivot will be. Perhaps it trades below today's low and does something like this, and that could get me at least back in, so to give you a point of reference. But for now, I'm pretty neutral, I think, overnight. So the banks were a little tougher today because they diverged and tried to be stronger. So if you added to them like I did, you probably lost a little money there. So even if you avoided high beta land and didn't chase, that could have been a little bit of a spot, but it made sense to try. It diverged, it showed relative strength, and then it came in at the end of the day. Facebook also was a little wishy-washy, acting a bit better. We talked about this head and shoulders top pattern, and then we also talked about this descending channel that it's trying to break above. So today it started off a little weaker, then regained its footing before the market sold off. I still think it looks okay. I came in long Facebook, traded around it. I probably lost some money trying to overtrade it. So we'll see what happens. One of my few longs overnight, see perhaps it tries to get going a little bit more. It's been a really nice move since way back when we talked about this cup and handle pattern. This was the first pattern of the year, and then it resolved above this descending trend line and then gave you a nice tradable move until last quarter's topping action. So entries and exits matter, and they matter here, and now we'll see what's going on. There's a little bit of a tug of war going on here. I think as long as it stays now, you have a new point of reference above yesterday's high of 46.26 and does some sideways action, it could continue, especially if the market holds in there. LinkedIn was weaker today also. I have a bunch of lines here. I'm not even going to get into it. For me, I'm not really trading it. Yelp, this is trying to hang around. If you take a look in perspective here, I guess you could say it's trying to hold right around here. below the moving averages, a lot of resistance. It's maybe on the B list until it wakes up or does something different. Some guys made money short gold. We talked about it in the morning call, talked about the last few pivots here. You had a few of them. One was when it broke below this recent low here of 121.75 and stayed below, went sideways and then just broke below 119, closing the dead lows. The good book would say take some home short. If you did, this is one level, but this is a micro level. Then the real level is right there below, right around 115. So I know guys were talking about it on the VTF, and rightly so. It's been in a pretty harsh downtrend all year and looks like it's continuing lower. So that seems like the right trade there. I would not be trying to bottom fish this long whatsoever. But again, trying to get that last juicy trade could be tricky, but if that's your thesis, I think it's the right thing to do. The casinos tried to be strong and just weren't ready because this market seems like it's not sure what it wants to do. So until it really breaks above this 72 and change, this could stay in this upper base for a little while. So we'll see what happens there. Tesla also, still not Tesla of old. You look at how trends change, especially in these high beta, high valuation stocks, and this was following this trend very closely. This was one small break of the ascending channel up here. Then when the market made new highs, it didn't right there. That was one little cautionary red flag to lighten up, and even if you miss that and you don't take it into earnings, that could have been it there, and then it gave way to the 100-day. And then you did have a little bit of a trade last week where you had a small red dog reversal. You had some follow through Thursday, and then it kind of ran out of gas Friday. You take a closer look here. It's still below the moving averages. This is pretty faulty bounce. To me, it doesn't look like much. I'll tell you that. If it opened up down and maybe went back above today's low at 123.93, perhaps it looks a little bit better. You can be trading it versus area, but to me, you use a 15-minute chart on the daily chart. It does not look compelling. It doesn't look like anything's so great. But it is above the last week's pivot, so see maybe if it makes a higher low and then tries to go again. This is like take your trades and figure it out, and this will be like a trend line, so it's going to have to really get above here to get juicy again, and until that happens, I would just keep it small and keep it on a lower time frame. So with that said, typically you get, especially after last week's strength, going into the 2 weeks prior, a little bit of weakness, a little bit of corrective activity in the first week or so of December, and then from there, sometimes we do get the Santa ringing the bell. But from where we were, pretty hard to do it considering the S&P up 25+% for the year, the NASDAQ up, I think, 30% plus, over 4,000. So if they shook the tree a little bit, that's fine. I do think that we took advantage or were involved pretty well with last week's rally on the virtual trade floor. You saw us long a lot of the key names all week long. I know for me, I had Apple long on the VTF from Monday, took it off Friday, and then today there was not even a plus or minus on it as I stayed away, and that tends to be one of my key stocks. I've tried to get away from it and find other things to do, which I have. I have 6, 7, 8, 9 positions when things are going, but we tend to do better when Apple is in play. So now we'll see if you didn't chase it, which a lot of us didn't. We'll see tomorrow if we could buy it at 548-ish or use today's low as a pivot, or even if they shake the tree down further to that prior breakout at like 538. But I think that would be a gift. I don't think we pull back that far. So with all that said, light on your feet right here is good. We've had 2 down days in some of the sectors. There hasn't been many times this year where we've had more than 3, so if we open down tomorrow, there could be some opportunity. We'll figure it out as it comes. I would take it a little bit slow right here and just don't have any opinions, and let's see what kind of action unfolds for us. Monday, have a great night. See you tomorrow in the morning at the call. Have a good one.